Good morning, my friends, and welcome to the weekend edition of the Breakfast Club. Welcome, welcome. Let's get started. I want to kind of go through taking the charts and let's just break them down into the whole month and start working our way back from the month and kind of set up our charts. And then see where we expect price action to go. Look at that. How crazy has that been since December of 2022? Just up and up and up she goes. All right. So we're going to kind of break it down into what we see the market. Let me make sure I'm live first here. There we are. All right. We're up and running. All right. So the month of NASDAQ, it's monthly chart. This one I'm kind of looking at, and I'm going to put everything in red. I'm going to kind of just mark out the charts. We're going to go from a monthly chart, fair value gap below us so far. And we can't really call this a fair value gap until this month is finished, and then we can call it a fair value gap. But for now, that's what hasn't been painted in the previous month. Okay. Downside objectives. We have what Michael refers to as a suspension block on the monthly. Oops, let me just put that in here. On the monthly, that's this one right here. That's what I'm looking for. I'm not looking at this just yet. I'm looking at this one. There's an overlap here, so we'll have to take it down to here. When we start getting deeper into this month, then I'm going to be looking for, I'm going to get a deeper retracement. We're getting back into here, then I'll be looking for 21,571 as an objective. And then 336, then 100, and then fill the rest of this whole volume imbalance. And yes, just look at volume imbalance and a SIBI here. Okay, so that's the month. And let's look at the weekly. Let me just look at that monthly for a second. And like an upside monthly objective, I think I will put that as. I hope that's bright red. And let's go to weekly. Russell, my buddy, how's things, man? How are you this morning? Thanks for tuning in. Oh, we got a couple of people turning up. Nothing better to do on a Sunday, hey? My wife's going out for lunch or her breakfast with her friend. So we get every kind of rare Sundays. I get to go out. When she goes out with her friends, I get to come in here and spend some time analyzing the charts with you guys. So thanks for tuning in. I appreciate your time. For the rest of you who are in the background, say hi, pop in, text, just say hello. It's nice to see you. You don't have to participate, just kind of sit back, relax. I'm going to break the market down a little bit here and see what we can get in terms of an objective for the week, and then daily, weekly objectives, and then see how we can play on that intraday. Yeah, it's good. I enjoy a good little analysis on the weekends. I do like to stick in the charts every time. Before we go to bed, I'm always kind of looking around at the charts, looking at what we're dealing with for overall market structure and all that kind of stuff. So I do like to kind of break it down and look at, that's a weekly breaker. And I want to put that as a and if you see something and you want some more clarification on, by all means ask. And if you see something, if you've got a narrative that you think that provides some clarity on where you think the market's going, by all means let me know. It's a full participation thing. If you want to kind of give me your feedback, I'm all for it. So if you look at this on a weekly basis, see how we have this volume imbalance sitting right here. We trade above that little volume imbalance right there, just above it, come back inside it. So you go, I'm not really convinced, Darren, that that's really going to get us anywhere. So I'm going to wait for a structure break. Now you may look for this one here, or I always tell you, look to the candle to the left. The first bullish candle to the left, and it's this guy here. So watch, as we trade above it, here, draw it across. Come back, give it a little tap, and away you go. That's a weekly level. So when you're looking for this, Russell, this is what I'm going to tell you when I see you in a couple of weeks anyway, is always kind of look at these higher time frames and say to yourself, what have I got? Where am I inside the range? Am I in a discount portion? Have I broken a SIBI or a volume imbalance or a fair value gap or whatever? And have I swept an old low? Have I swept some liquidity on the downside and I've got equal liquidity or relative equal highs above us? I've swept all this on the downside. Now I'm looking for a change in direction. So the first thing you start looking for is this immediate rebalance or this volume imbalance or a SIBI or something on the other side. Then I always look for this candle to the left. Okay. Always look to the candle to the left. And when you see that, you want to say, when I see market structure break this volume imbalance or the SIBI on this side, I'm targeting in the small range that I'm in, I'm targeting this BISI, or sorry, this bullish candle, and then I'm waiting to get on top of it. So if you're inside this range and you can get in a discount to run for that candle, that's internal range liquidity hunting. Okay. Now, you see how this volume imbalance is so high in this range? Like if I take my fib tool, this is how you kind of got to evaluate each one of the levels, whether you want to decide to commit to a trade or not, right? So if that's the high and that's the low inside that range, and my volume imbalance is above the 50%, you got to ask yourself, are you willing to pay for a premium in a level where there could be an optimum trade entry reversal happen on you, right? So the rules are wait for 50% or less to get long inside there so you can hunt internal range. Because what we're looking for then is the next rule to be broken, which is what? Think for a second. What's the next rule that needs to be broken? In this particular scenario right here, I need to get above the volume imbalance. If it's in the below the above the 50%, I need to get above the volume imbalance, and I need to get above that candle to the left, preferably with the swing as well, right? if there was a premium array up here, like a BISI, and we're lining them up, the next objective would be when you're at 50% or less and you're inside your SIBI, you want to aim for your premium array. So you can either pull your fib tool inside, use take profit model 1, which is your 50, 62%, so on and so forth, and you move it up, the stop loss up accordingly. Just refer to that take profit model I got in my videos there. You take your take profit model 1 all the way inside here. Now, as soon as if it comes back and takes you out, then you move to the sidelines and you wait for a structure break, because now you've worked the internal range liquidity. Because if this reverses on you now, you're going to be like, sweet, at least I got in at a discount, I sold at a premium, I covered my butt real quick, and I'm just milking out whatever's inside here. Now, if it's a full range extension, let's say we don't see what's happening here. In other words, this is over here like this, like that. And we're saying we don't know it's running for there. We're expecting it to run to there because it's cleared out all this liquidity below the market. And we're looking for this to get broken, this even levels to get taken, right? So you want to see market structure shift now. And now we know that it occurs when we start to get above here and above a swing. So if this candle closes above here and it comes back, now you start targeting this and you say, my stop losses, my entries are going to be 1, 2, last ditch effort would be right on the mean threshold of that candle. My stop loss goes 1 tick below that low. Okay. Especially if this has already been revisited. Okay. If this hasn't, there's a different thing we have to keep in mind. If we lose the mean threshold of this, one of the rules is if it comes back below the mean threshold of that bullish candle to the left, look for a revisit on the discount portion of a SIBI that hasn't been activated from here. Does that make sense? So you're going to look for, has this been activated? Yes, it has. Great. So now we go above. So now we've got this change in direction, or sorry, a reversal pattern set up. Get long, wait for it to break here. So you've taken the liquidity inside the market. Now you wait for your setup. As soon as it clears that candle and comes back to it, you're going to get long. Stop loss will sit here. So it's a relatively small stop loss. It's easy to say. We're in a weekly chart, so that's a pretty big stop loss. So what you're targeting then is at this weekly level, we're starting to target this high, the close, and the mean threshold of this candle. We're looking for anything in here that shows a change in direction on the lower time frames. Now, you may have to wait for your conviction. Let's say you are trading on a weekly chart. You're looking for a daily and a 4-hour. A 4-hour would act, or a 1-hour would act like a 1-minute candle for us. You wait for a 1-hour reversal to occur in this level to catch the long. And you're targeting what? The next range here. So your first target is the high. The next target is, or the rejection block, high. And then this little imbalance right here. You see that? That's our premium array inside this whole range. Yes, you got all these, but I'm targeting that. So you'll see, you enter in here, you look for your 1-hour change in direction. And as soon as you see that 1-hour change in direction and it starts to move against or move with you, you go, great. Now I'm targeting rejection block high, move to my stop loss to break even. Well, the next week opens up and starts to run right away. So you're like, sweet, I catch that and let it run. The week closes, you move your stop loss to the bottom here, and then you were still targeting this level here. So from this entry at, let's say you took the high at 306, the drawdown would have been 269. So it would have been 30 somewhat handles. That's it. That's the drawdown. And then you run up to here, you're at 300 handles already. A target, if we hit our target, which is right there, right on the money, 3 weeks later, 1, 2, 3 or 4, depends if you feel the whole thing. It's 2 to here, almost 1,000 handles. Almost 1,000 handles. That's treating that like a 1-minute chart. And you have to take a whole week of it returning on you too, going, oh, am I on the wrong side of this? Is it going to turn? Right? If you're holding that as a long-term trade, and you're aiming for that spot there. You've hit it 1,000 handles, moved to the sidelines, and now you wait, like we did down here, you wait for this to get taken to the upside. And if it does, it gets taken to the upside on a close, you go, great. Now I want to see, does it not take out the high there? If it doesn't take out the high and stays below the mean threshold of this candle, I want to start going, I want to catch it for these relative equal highs. Those relative equal highs are taken. Now you say to yourself, the same thing we did here. I look for the candle to the left. So here's all this imbalances. We've cleared them all out, and we've cleared out the premium array. Now you look for this breaker that you've got all these candles act like a breaker that takes out all this stuff down here. This breaker, you want to see price close above the breaker and use the breaker as leverage to go higher. Now, I always look at this last up close candle. It's the most sensitive for me. So I look for the high, the close, and the mean threshold of that candle. Stop loss will go below, one tick below that low. Okay. If you're much more cautious, you'll put your tick down here, which is like 500 handles. That's a long way, right? I like to make sure that if I lose that mean threshold, I know I'm targeting ones down here that never got a chance to get revisited. So that's my line in the sand. That's just my rule. You develop your own rules around that. Okay, so you see it closes above that level and then literally goes boop, taps it. Now you get back in. So you've traded internal range liquidity. You're now catching external range again. So now again, you're looking for this level and you're looking for targeting a 1 hour, a 4 hour chart to catch that for a long. Okay, so let's just dig down there for the sake of this, because this is not really turning into a market analysis as it is my setup. I'll show you this quick, then I'll get into that. We'll continue going further. So I'm looking for June 30th on a daily chart. June 30th on a daily chart. June 30th, right here on a daily chart. So if you look here on the 30th, you say, here's that imbalance. Here's the top of the candle. If I come back and tap that, now if I can get back above this candle and see this candle act like a propulsion, I want to see it close above it, come back, tap it. It's high, it's open, or it's mean threshold. It comes back, it taps it, and now you want to see it leave. So the next few days, you just let that run. And your stop loss is going to sit right below the low. Right? So as soon as it starts to take this imbalance right here, trades through it, if it can come back and tap that, you'd be great, which is right there. On the July the 7th, you start leaving from there just for the confirmation that, yes, we did tap the high. And now you're looking for that imbalance to get revisited once you close above it. It does right there beautifully with perfection. So at 23,061 or 016, you're looking for a 1 hour chart on the 7th for your entry long, and your stop loss will go below the low, and you just let it run. And you can drill down further and further, and you'll get like, so we'll go to the 7th here of July on a 4 hour chart. 7th of July, right here on a 4 hour chart. 3, 6, 7 is right in here. So look at your ranges that you're in, and you're hunting for. So you've got your lines drawn in here on the key level on the higher time frames that say, I want to see support here and I want to see it go higher. All right, and that was back in June 30th, which is right in here. We see market structure break above that high. This and this, there's your premium, there's your discount. All you did was come back inside this range here on the 7th of July into a discount portion. So use this low to that high. And you hit right at 62%. You could be entering in at 50%, 62%. Back at this old high here. This BISI. Do you see how we start to break it down and say, I'm zeroing in on my perfect entry now for a long, and then just let it go. So once you catch that and your higher time frame weekly says, I'm going higher, once you've zeroed in on your entry, you catch it and leave it. Now get away from this level, go back to your weekly level, and enjoy your run higher. So that's how you got to zoom in on those levels, okay? And zoom in on your entry. All right. So anyway, where are we at? So it's just a matter of finding your higher time frame and zeroing in on your lower time frame objective using your daily and 4 hour and 1 hour to give you your entry. And you can dig all the way down to a 1 minute chart if you have to. Okay, so let's look at what we've got here. On a weekly level, we have here to here. Look at this small little range that we're in here. Where's this sitting? If this is the range that we're in. So if we, see you later. If we drop below here and come back in and use this candle as support, I'm looking at 1, 2, 3 levels of support on a weekly level for this to come back inside the range. What would I be targeting for? Look at 50%. 50% puts us right back in this busy here. You see that? So as this candle now has been validated, I'm looking at its high, its consequent encroachment. You can divide this up into 4 levels. Take your fib tool off that wick. Divide it into quarters. So what levels am I dealing with inside this wick? I'm looking for 989. That's pretty much where it's ended. I'm looking for the midpoint of this candle. So if we open this week and we gap down to here, find support at that at 942, you're looking for a reversal here to continue to run back into this wick, which you're also going to take your fib tool from low to high, and you're looking for the 25% of it, the 50%, and the 75% of that wick, and then obviously the high. I don't have those marked out because these are just the key levels you're looking for inside there. So those 3 levels are what you're looking for inside that candle or inside that wick. This next one level would be right here at the open, which is the 849 level, and then the mean threshold level, which is 789. So you kind of mark those out on your charts and you say, this candle has now been validated. Its wick and its body have a certain data points that I'm looking for to see if I retrace to them and continue in this bullish trend to keep going higher. I want to see these provide support. And I don't want to see the mean threshold of that candle give way. If I do, then I'm looking at this one. Then I'm looking at half this wick right here, the larger wick. And I'd split that into quarters as well. And I'd look for targeting 652, well, rejection block, or sorry, not the rejection block, but the lows right here first. Then 652, 577, 502. I'd be looking for those inside that level, all the way down to a complete fill, which we don't have yet, of this BISI. And I'll make that a watch here. Oh no, we won't put that watch here. We'll make that a That's a fill of the weekly BISI. It's finally finished up right there, right? So if we're on a weekly level here now. So we've got weekly, another weekly candle, downside objectives to the previous week's low and a fill. Or we have, see if we break through these levels to find support to go higher. Okay, so we'll see where it opens today. And those are the first bunch of targets that I kind of lay out on my chart. So Friday's open. Is that Friday's? No, it's weekly. That would be like Monday's open. Friday's close. I just want to see if this was a, I got lots of overlap here, sorry. I'm just seeing if this is a, nope. Actually went every trace lower. Do you understand those points I got there, Russell? Oh, you're welcome. Hey, good morning, Hadi. So this is all that remains of this weekly fair value gap. Okay. Chandra, how's it going? The trip was amazing. Yeah, it was a great, it was amazing. Africa is definitely put it on your bucket list. You definitely got to visit that. It's amazing. Scott, how do you know when to use the quarter fibs instead of the standard fib levels? Is just for wicks? Thanks, Steve. You use it on wicks and you use it on fibs, or sorry, on BISIs, SIBIs. That's what I use mine for. So I use the quarters fibs on the wicks, and you can also use quarters on ranges as well. Here's why. Now, if you've ever learned an ICT, if you learned a lot of ICT stuff, you can use quarter techniques like this, for example. Here's how I use quarters on a range. I'll put them all in here. So if you're looking at a whole range, for example, right? We'll use this one right here so you can see it's a little clear. So that range from that low to that low to that high, okay? We know this is the equilibrium or mean threshold, or sorry, mean threshold, the equilibrium of the range, the EQ of the range. We know this is the discount portion of the range, right? When you're working internal range liquidity, you're looking at the premium discount and the discount. So this is the discount of the discount portion of the range, and this is the premium of the discount portion of the range. This is the premium discount, and this is, sorry, premium discount, this is the discount premium, and this is the premium. Discount of the premium portion and the premium of the premium portion. So you got to remember, when everything's fractal, we're working on the lower time frames, we're working in this discount. There's back and forth going inside here using that high and that low as little areas to target for on smaller range liquidity. So everything's fractal, right? Always goes back and forth, tracks back and forth on us all the time. So I use it for ranges when I'm especially when I'm trying to hunt out something like a SIBI There's only one little SIBI inside a small range. And I'll see if I can find that for you as an example. Let's say here, right there. I'll move this out here so we can use this so you can see the numbers a little clearer. See how I've only got one SIBI there, or what a volume imbalance. I want to see it for a price change or a change in direction. I look at this and I go, where am I inside this range? I go, I'm above 50, so I'm in the premium portion of the range, this premium portion, from there to there. I'm in the premium portion, and I'm in the discount of the premium portion if I stay just below that 25% level there. So if you're buying it at the discount portion, so the discount premium, and you're heading for the premium, which is up into this box here. So you're below here, you'd buy it here and you start offloading it in your premium. Unless you break out above that, then you're starting a whole new level. I'm looking for premium, discount premium. See how we go from premium to discount, back up again inside that range. It's always back and forth. So that's how I use my quarters. I use it on a bunch of stuff, especially when I can't determine exactly where my discount is. I'll sometimes take a SIBI here. If it's straddling a 50% mark in a range, I will block out that last little portion below the 50 there and say, that's what I expect to see it run into to go higher. I know I'm kind of jumping all over the place here. Hopefully that makes it a little clearer for you, Scott. Does that make sense? Sorry if it was a bit all over the place. It's been a while since I was here. Yeah, it's been a while since you were here. What have you been up to, Chandra? Oops, sorry, I just tapped you in your ear there. Is it worth marking weekly bullish order blocks at 24,851? 24,851. Bullish order block 24,851. Weekly bullish order blocks. Which one are you talking about? 24,851. 24,851. This whole candle right here, that's a bearish candle. It becomes support. Like you want to mark from high to low. Is that what you're looking for? No, you've got to take the wicks. Use the wicks and the body. You're looking for these key levels. And those key levels are going to be the ones you're looking for on your daily chart to see, do we hit them? And do we get a reversal or a change in direction that supports a continuation on a weekly chart to go higher? I want to see this act as support, right? It's like this candle. I want to see it act as support to go higher. So it's high. All this was broken up, right? Using your fib tool. Like you take this little fib and do your quarters in here. See how we started this week off here? We traded all the way down to that 84.7 or 847 level, which is 75% of that range. And then we started going higher. We took out the high. You pay yourself at the high. And then on the lower time frames near the end of the week, we start looking for our 4-hour reversal or a change in direction, or the wick that creates the high of the week, right? And that would be on a Tuesday or Wednesday, Thursday reversal, and you're looking for any potential change in direction inside here. But you're targeting, you're looking for this and saying, do I see a reversal here? I don't. Do I see a reversal at this one? Just in here, I start to see a reversal on a lower time frame. So you have these on your charts as levels you want to see changing direction. I'm expecting on the higher time frame to see a change in direction here in this week, so I can catch a run back. If this opened and went higher, then went lower, and then came back in here, all this, you just go, I'm looking for any change in direction. So when we hear people say, well, I don't know how to, I get nervous when it makes brand new highs. Who cares? Just if it breaks this high right here, That's your target. If it breaks that high, then you start looking for continuation, like we saw way back on the weekly right here. Breaks the high right there. We come back, we tap it, we see a continuation. So that high gets broken on the weekly, find on the 1 hour, 4 hour daily a continuation, and you just continue to catch the candle until you see a 1 hour, 4 hour reversal. And then you're out. Then you're done for the week. It sounds simple, but that's the discipline you have to try and establish. The moment that high is broken, like here, look for your entry to catch that portion of the trade. Now, if we start to trade back in a downward turn, and then you start to break through the candles open of the day, and then we kept going lower, then you look for your downward target. So I'm looking for here. All the time you're in that downward trend, then you keep targeting the next box. Do I see a reversal? Nope. Do I see a reversal? Yep. Now I'm out of my trade, move to the sidelines, or catch it on the way back up again. I know it sounds like it's that simple, but if you're disciplined enough to recognize that on your time frames and don't get too caught up in the 1 minute chart, which is what we do, and you have the discipline to recognize these weekly and daily charts turning at specific levels and then catching it and then just staying the hell out of it and leaving it alone, let your trade run and get back into your 1 hour. Once you've got your 1 minute entry, you go to your 1 hour chart and just let that manage your trade, or a 15-minute manage your trade for the rest of the day. But if we're trading on a weekly basis, you're using a 4 hour chart to manage your trade. Now that's a hell of a stop loss. That's a lot of profit reversal when it changes directions, comes back and then continues going higher again. That's enough to make you sweat. You see what we're like on a 1 minute chart. Imagine sweating that out in a 4 hour chart. But you're trading on a weekly, so you have to pick your time frame you want to stay on and be committed to it. So this would be like a mega trade. You're trying to catch this one early in the year and you're letting it run. I don't know if that makes much sense to you or not. The small down close candle, wouldn't that be an order block? This down close candle? Yeah, it'd be more of a propulsion block for me. I want to see it propel price higher. And where it fails for me is these levels. If they fail, then I start to change my narrative to, are we just reversing and taking out the low of that candle and then using the wick to come lower into another objective, which would be this little fair value gap down here to fill. Old high, break that wick up into quarters. And that wick broken up into quarters would be something like inside here. Let's take this one just as an example. If you take that wick high and look at where they overlap, 75%, 50% puts us, here's 50% of the, or the consequent encroachment of the BISI, not quite overlapping there. No, so it's like you're 75%. If you just dip into 75% of that wick, you're starting digging into this BISI right here underneath. So I'll be looking for these levels. They're overlapping small little levels here, there, all of them on a weekly level to see if there's any change in direction. If that makes any sense. So you take your weekly chart, put all your targets on there and say, well, how am I going to act now when I get down into the trenches, when I start digging around in the daily, the 1 hour and the 4 hour charts? What am I expecting to see at those levels? If I start to see a change in direction, I go, okay, now I want to say, where's my next target? What would I be aiming for inside this candle? If we open up higher, hit this 50 and reverse, I'm targeting the high, I'm targeting the 25, 50%, the wick. I'm targeting this wick here, right? Those levels inside that wick. And all the time I've got support on the 4 hour or the 1 hour, I'm still going to keep hunting all the way through this candle for a run all the way down. Sounds simple, I know. Okay, so let's go to a daily chart. Any questions on that? So now you look at where are we inside this range? Okay, so I've got my objectives on the weekly candle, my wicks. And now what I want to see is on a daily chart, where has this candle been validated? It has, right here. It got validated right there. We're still inside all of them, but that candle for me is validated, and I see a nice little BISI sitting right here. And that happens to sit right inside our daily fair value gap. So I'm going to take these. I'm going to go back here for a second. I'm just going to say, I want this to stay on this current interval only. Just so we don't get too much overlap going on here. So when you go back to your weekly, you say, what's my weekly objective? Okay, good. Now my daily objectives. And you write these down, obviously, otherwise you'll have your charts just be packed with numbers, and it just gets super busy, right? So write down all your numbers on what you're expecting in a premium portion. So you'll take your weekly range that you're in right now, and you say, here's the old weekly high, the old weekly low, the open and the close. Mark down those key levels, and then you look for the wick, take those highs, take the whole midpoint of the body, take this and split it up into high, mean threshold, and low, and see how those act inside that those key levels. Just put them down on your chart. I like this one here, this bearish candle. So I'm going to put write all those down as targets, and I'm looking on the next time frame, lower time frames, to see if we see this starting to go higher. Or if we're reversing, where would I run to inside last week's run? What would I be aiming for? Last week's low, previous week's low, and then obviously much lower. I got other targets down there. And that'll tell you, I'm aiming for that stuff if key levels in here start giving way. All right, so go back to your daily. So we've got our BISI sitting here. We've got a new high formed here from last week. And we've retraced back into this BISI. Now, what do we know about levels that are taken to the upside? What do we want to see? We want to see, the rule is, if the high is broken, I want to see specific things. First of all, I want to see a big bold candle break that high. And then I want to see a small candle form here and create a fair value gap that occurs above the high. You'll hear me say this all the time. I want to see a fair value gap occur above the high, right? If it doesn't, so we'll stick with if it does first. If it does, I want to see a graded response. I want to see, hang on a second. I want to see an A+ response would be just a leave from there. A B level response, or an A level response, would be a institutional order flow entry drill, which is just tip into that BISI. A B level response would be right to the consequent encroachment, and hopefully this old high comes up and lines up with the consequent encroachment of the fair value gap here. A C level response would be 75%. A D level response would be a full fill, and then go higher. Anything below that, it's a fail. It's a run to here. Now I'm looking for the next BISI below me, which is this guy right here. And I'm looking for the last up close candle, and I'm looking for what? It's high, it's open, or sorry, it's high, it's close, and it's mean threshold. Those are the three levels I'd be looking for. The line in the sand would be if we have this BISI lines up with this candle's mean threshold, I don't want to see this BISI get closed below, and I do not want to see that mean threshold get targeted and broken. So it gets targeted but didn't get broken. See, we hit it and then rejected off of it, and now I want to see we have to stay above here. So I want to see this. What would be ideal today, if I see this today, is to see this candle open somewhere inside here, come back, tap this BISI here one more time. It can even come down into the consequent encroachment of it, and then start to march through the mean threshold of this candle, because this one has been validated by trading below it. So my battle right now is between this candle, because it's now on par for a continued, like a push for support to go lower. You've got this one that wants to support it to go higher, and this one wants to support it to go higher. So I've got two overlaps that want to push this higher, and we've got a bounce off of it already and a nice wick. We ended up the wick of the day with a wick inside a level, but we're still inside that BISI. You see that? We're still inside it. So for me, I have to get above it, pop on it, and then start eating through this mean threshold of that candle. Rejection block, half the wick, take the wick into quarters, and then start working your way up. That's just the daily level. Okay. So for me, I need to see, where do we open today? Do we open below this BISI, or do we stay above it and start marching higher? This has to provide support. If this was a 1 minute chart, this is exactly what we'd be looking for, i.e. as in this case right here. This is another example of what we're looking for here. Rinsing and repeating itself, right? We wait for a body to get above that. This candle opens above, comes back inside, validates it. Okay, so we just got wick, 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 wick. And finally, we closed above it, or opened above it, came back into it. That goes long. Next candle opens up inside it. We're still, as long as we've activated it to, as an inversion, we want to see it go higher. Right there, it activates this as an inversion the moment we get back down onto it. Right, so there is the inversion. That's the crossover, and then we go aiming for rejection block, half of the wick, old high. It takes it out. Good. Now the same kind of thing here. I want to see it, like I explained to you here. I want to see a fair value gap form above this candle, right there, and then I want to see this candle. See that fair value gap forming? Then I want to see it come back down, and just ideally, you don't want to see a big run all the way up like that. You want to see just a little pop down, tap, institutional order flow entry drill, consequent encroachment. Look at that. Remember I was saying I wanted to see this come up here for consequent encroachment? Look at this right here. Take it out. Let's do this. Go here to here. Make sure I'm right on there, and I'm just gonna use equilibrium. I just want you to see this. This makes my point. Equilibrium of that is that candle's high, 299. Look at that candle's high. High is 298.25. Okay. So that's lining up with consequent encroachment of this. If I make sure I provided that in the right spot. 299.5, so it's 299.85. So it's literally 1.25 handles shy of that equilibrium. But that's the target, which is what I'm looking for. That's my point. Okay, so everything I explained here that I wanted to see, we saw right here. Fair value gap. Now I want to see that trade. So when it starts to trade back into it, you start saying, I want to see the high, the consequent encroachment. I want to see that just get tapped. And then I take, okay, then I start taking the wick, which is the last up close candle. What's the low in that candle there? 242. Just shy of that 50%. And we're over 25. So you're looking for anything in here for that chance to see a reversal. We've got through here. So you look at that wick and you say, is this is my next target? Do I see anything there? Nope. Do I see anything here? Oh, I see something here. Good. If I can get back above this level, I'm looking for an entry in here for continuation, because I want to get above that BISI and turn that into an inversion somewhere in here. So those are why every time it comes down, if it just violates your level, you just pick your next level and you wait for your reversal. Does that make sense? So you got to be very patient and wait. And then when you see your setup on those lower time frames occurring after hitting a key level on your higher time frame, then you can get back in sync with the market and run higher. And then you go, great, now I just want to see this level get broken to the upside. And then it continue. If we come back and hit it again, I'm all right with that. Or if you're trading this one, because we're on the daily chart here, if you're catching that on a daily run, you've got your 4 hour. If you see a 4 hour reversal anywhere inside here, you just move to the sidelines. Okay. So where are we at right now? So I've made my point down here, what you're looking for when you start violating old highs, right? So this is what we're looking for. We're violating an old high, and we did not get what we're looking for right here. We did not get that up there. So you have to adopt a new set of rules and write the rules down, and you got to have them written and clear, and you got to follow them. And then if they don't work out, modify your rules. Look for where it fails and why the rules need to be modified. Any questions so far? Anyone? No? Okay. All right. So what I'm looking for here now is this level has to provide support. So now what we want to see is price ran above it. We did not get our fair value gap occurring above the level. So now it has to be the line of support to keep driving this higher. If we close below it, we take our range. Let me get this one out of here as well. Get this out of here. So now take your range from low to high. And yeah, you could use this one, but there's not enough data points in there for you to play off of. I'm looking for a discount array. So you see this right here, this immediate rebalance. I have to find out whether or not Michael uses an immediate rebalance is from this candle as it starts to come back, that it runs all the way back to this candle's open. Is that an immediate rebalance, or just the fact that it came back and filled in this little down piece here from there to there? Anybody got any idea on that one? I'll have to look up on the IO. What the hell? Let's do it now. Find out the answer. When in doubt, go to the horse. Ask Michael. We're going to go ask Michael. ICT index. Thank you. .io. All right, so I'm looking up what an immediate rebalance is. So when in doubt, go to the horse. What is an immediate rebalance, count? An immediate rebalance occurs right after a large impulse candle, either bullish up or bullish down, that stands out compared to the previous candles. They are very next candle after it. Big move, retraces back to the body. Okay, so what he's looking for is a big, like let's say we have a big displacement candle like this. An immediate rebalance would be a run all the way back up and bounce it off right here. That would be an immediate rebalance. Okay. That's how he's defining. So that happens immediately, not after. So basically you see a big displacement candle with a quick replacement. That's how he's looking at a rebalance. I'm looking at everything that comes back and refills it, which is probably not the definition as Michael would explain it. It's an area of sensitivity for me. It's worked in the past, so I'm going to stick with it. I'm going to be careful about how I use the language, though. So this level, I'd be targeting this candle. Basically, I'm targeting the last down close candle, because this is a breaker. These three candles, daily candles here, is a breaker that takes out this high, right? So that big cluster of candles there, you got to say it's high, it's open. The mean threshold of all of that, if I take the mean threshold right there at 725, that's the discount portion. I'm looking at this candle's high, so 796.5. It's open, which is 748, big figure, 748.00, and its mean threshold is 68575. Take this wick, you gotta take the wick is in here as well. You gotta split that into quarters. There's a lot of little areas of sensitivity in there. So if you're looking at the whole range here from there to there, 50% puts us right at 811. So a dip into just below the equilibrium of that will hit this last up close candle, or sorry, last down close candle with its wick on the high at 792. So internal range liquidity daily, I'm looking for, do we break below here? And if we do, what are my targets in this lower time frame that I can target in this weekly range here, right? I can start targeting 50% of the weekly range. I can start targeting at 1, 2, 3, 4, 5. No, this would be more like the weekly range. 1, 2, 3, 4. That's the weekly range. And see how 50% of the weekly range is right at the bottom of this. Busy. I'm still targeting that candle. This candle's key for me. If we get below here, I'm targeting this. And there's a small little imbalance right here, this volume imbalance. Mark that out on your charts. And yes, we cut through candles. And then I did this. This is how I kind of break up my order blocks. I take very specific ways you look at the candle, my marks, and I do this. Kind of look at it like, here's the floor. You want to see it bounce off of that nice and strong. From here, it gets weaker. There's holes in the floor, and then all of a sudden it's just powder. If that gives way, then I know I'm heading for discount. This rejection block, 25% of that wick, 50% of that wick, 75, and then the full, looking for the weekly fair value gap to get filled. Okay, so there's a point in which it fails for me, and I know I'm looking for a continuation through here down into the higher draw on liquidity, and the higher time frame draw on liquidity is down here. Okay. So this is equilibrium of the whole range. Starts getting really you can see how your charts can get really let's just turn this into a that happens to line up with that. This one, that represents the high of the last down close candle in the breaker. That candle is the most sensitive for me. So it just represents the high, and then this little broken line represents the open. So when you want to see something provide some support, you want to see half of this, no more than half the breaker get hit and go higher, or the last sensitive level, internal range liquidity hunt. And we'll kind of just take this whole thing here, and you'll see where these levels start to line up. If I pull from low to high here, optimum trade entry reversal. Okay, so if we're coming back into this range and you're hunting internal range liquidity, 50% puts me right near 50, the high of this candle. 62% puts us just below the open. See how they're all starting to overlap now? 62% puts you right on the very tip of this volume imbalance here. That's right at 62. So if you're coming back inside that range, target, and then you'd look for anything. If you can catch a reversal here off of this, you're targeting 50%, 62%, that drawn liquidity there. And if you lose that, then, and we come back into it, I'm looking for way past 70. I'm looking for around the run into this wick rejection block and this BISI sitting right here. Okay, so I want to see, in order for us to get a short in here, it has to trade below here, come back inside this, and continue running lower, targeting 50% of our weekly range. And with 50% right here. Is that really 50? Yeah, because this was the weekly range right here. 1, 2, 3, 4, 5. That was the weekly range. So if we get through that, come back to it, I'm looking for down here. And there's a lot of little data points down here, which for me is a drawn liquidity if we get below there. See where today opens. Does that make sense, Russell? So this is the daily fair value gap. This needs to become an inversion, and we're starting to target all of these little data points down here. Oops. All these data points down here. So 4 hour. See how we have a change in direction here on the 4 hour? We trade back up inside it. Wicks give you a little, this like immediate rebalance right here. Takes it lower. Takes out this candle. Now we've got a 4 hour that's telling me that this change in direction that we have, once we take out that high, we're looking for any opportunity to see a change in direction right up here. So I'm looking for anywhere from 180 to 197. So we go to a 4 hour chart and say, I'm looking for any change in direction. On a 4 hour chart, it's going to be hard to catch something because there's not very many hours left in the day there. You'll probably see something on a 1 hour. Then we're going to look for 15 minutes. So I'm going to kind of box this out a little bit right here as an area of interest. So you can see that's where we're kind of looking for any reversal on the, and you'll understand why it is that I look for a specific, okay, we're looking for a target. Anything that shows us a reversal here inside that box. And we'll just keep chopping it down till we see it. And you'll see why you'll find that reversal was quite obvious on the lower time frame. So we're going to dig down in there. Oops, I just got to show that on all time frames. Okay. So we're looking for a reversal anywhere above here, that inside that little box there. So I don't see anything there, but I do see it right here. See that? Right there. So that's how close we get on the daily chart. So far, we can catch our, I'll put it as a watch here or open, whatever. So let's go back to the daily chart, see where it was in that wick that we would have caught that reversal. So once it broke that high, you're looking for any opportunity to see your reversal, and you would have got in your short right there at 146. So now we see if we can get down even closer to this level. So you can see it on a 4 hour chart already, right there. 1, 2, 3 levels that you can scale in. Stop loss will be sitting above here. And we'll be waiting, we'll be looking for a run below this low, or we're looking for a mean threshold of that candle to give way, and wick, low, target an old high, this candle inside the range, 50%. There's so many different ways you can look at how you can stay in this trade. So anyway, that's our change in direction right there. So we were looking for that on the daily, and we're saying, good, we've broken the old daily high. I'm looking for a reversal. Turtle soup. Now we're getting into the hourly chart. I don't see anything on the hourly chart. We do see a little pop above the high there. So here's your hourly level. Busy. We've got one sitting right here. We're going to get a little closer because this was our 4 hour open. There's your change in direction right there on a hourly. Right there, you see that? All these candles are balanced. We trade below this level. Right here, you open, trade into it. So our new entry is right here. That's our 1 hour entry. This was our 4 hour entry. Now we're going to keep digging in here, okay, because we're using a higher time frame objective, and this is picking at a specific point. So we're looking for any change in direction here, right? Same as any other target we're looking for on those daily charts. This is just exactly, just take what we're doing here as exact same thing on all those other higher time frame objective points that data points that we have on our chart, okay? And then you go, let's dig down even deeper. We're still looking for anywhere inside that little tiny pop above that high on a 15-minute chart now. So we've got our hourly. Here, I have to move these in, otherwise we won't see what they say. And our 4-hour reversal right here. All right, so we have right here a 15-minute change in direction. So we've got a body breaks up above it. It runs the highs, extends the range. It taps back on here. Now you want to see this continue going higher. And if it breaks the low of that, then we're on the wrong side of it. It broke down below it, so you're on the wrong side. So now you wait for a market structure shift, and you see it right here. It trades below it, comes back into it. Here's our 15-minute entry right here. It's a 15-minute entry. Oops. 15-minute entry right here. Come on. 15-minute entry. Okay, so you see how we're gone from 4-hour to 1-hour to 15-minute, and we're zeroing in on that area that we're looking for a change in direction. If you're really looking for this immediate rebalance, I'd be looking at this level right here. But we've got that guy sitting right there, so that's kind of nice. So if we trade below that, come back into that, that would be our level, and we'd be right inside our box that we're looking for. But we're only at 15 minutes, so let's go to 5 minutes and see what we see here. We finally ran up, took out that high. That's what we're looking for now. The highs have been taken. Now I'm looking for any opportunity to catch my change in direction. If I get a body, let's zoom in on this. If I get a body that trades below that level, oh, sorry, that goes all the way down. You have to include that little imbalance right there as well. Right there. If we get a body trade below this level, right here, trade back into it, right there, our entry is right there. See that? That's a 5-minute entry. Remember, we're just working backwards from here, right? We're just working backwards. A 5-minute entry. So where are we sitting right now? We have just so you kind of see how this manifests itself. We have a 4-hour entry way down here. 1-hour entries here, 15 is here, and 5 minutes sitting right here. Because we're looking at that higher time frame objective, and we're looking for any sign of a reversal. This is what we look for in the mornings, right? That's what you guys are looking for in the morning. So now let's dig down even deeper. Let's go to a 1-minute chart. And we're looking for, we're still inside the big box here. Now I'm going to make sure I put the big box up here so we don't have too many lines that, let's make this big and bold so you can still see it. And we'll make it black so you know we're inside the box. All right, so we've hit that. We've created a new high. Now we're down at a 1-minute chart, and we're looking for our sign of reversal. So anywhere from here to here is our premium box. And I'm just saying, if I see a body trade below this level, so I'm going like this. Let me get all these other ones out of the way here. I'm looking for anything inside this BISI, volume imbalance, whatever you want to call it. I'm okay with that. If you just use the volume imbalance, you trade below it, trade back into it, you got an entry here. But we'll take all of it from the high here or the low of that candle to the high of this candle. This is all BISI and volume imbalance, right? So if I see a body trade below that and trade back into it, I'm getting short here. And look at that, right to consequent encroachment. That is 1 minute entry. So again, let's just review our levels. We see on a higher time frame daily, we see this stuff happening, right? Now let me get all this out of here now. I'll get rid of the big box. So you see, here is your change in direction. So we see this, we see it run through here, and I'm looking for any opportunity now to see a reversal here. So you wait. Your first 1 minute reversal occurs right here. Your 5 minute reversal occurs here. Your 15 minute reversal occurs here, 1 hour, and your 4 hours down here. On the daily, we're looking for proof. Now, you get to decide for yourself where you want to wait for your opportunity to get in. So you say right here, let's go back to that 1 minute chart again. So you see it's going sideways, sideways, sideways. Let's just mark the old high here on the daily. This old high. Watch there. So that's the old high marked. Let's go back to the 1 minute chart again. So on that 1 minute entry, your failsafe should be if the fair value gap fails or fills. If it fails is what you should be looking for. Okay, so look right here. We could zero in even more right here. So we know this level right here is the top, the old high, right? Look at how we're smashing around inside that thing. This old high is broken. I don't know how far back that goes. Oh, right there. Okay, so we look for our first change in direction. You could get short right here. Let's say you went from right here. You wait for it to trade below it. You don't get an opportunity in there. You don't get it in here. You wouldn't get it till you got below this level right here. You see it trade through that level on a close. It does, comes back inside that level for a continuation. You get short there. So if you didn't catch, we couldn't catch anything there. I bet if we get in a 15-second chart, you'll see even more a crazy turn there. So you see it run out that high. So let's say you took this as the first turn and you say, I don't know all this is happening over here, Darren. I don't know that's all happening. I'm going to catch this one. And I'm waiting for a re-entry in here. So your stop loss, you're looking for, we'll have to look in here for a 15-second chart because I think that's the highest turn. Yeah, it's actually higher than that one there. Right? Let me just make sure so I'm not bullshitting you here. So you look for the highest change in direction. Nope. This one is the highest one. That one just lines up right in the schmuck in the middle of that. So let's say you waited for your entry here, you didn't catch it. You waited for it to break through here and you get short there. You go short. Okay, so this is where, let's say it once you get that short from there, you say to yourself, I want to stay, you go back to your daily chart and say, I don't want to see it break that high. So my stop loss is going to go above that high. That's it for the day. I'm in below here. I've got my confirmation that I'm in. I'm going short there. Stop loss will stay up here. And if I take a loss, I wait for a new entry to go short, or you pay yourself, you stay on this 1 minute chart and you'll see that there's a change in direction here. And you're back up inside this range. You go, okay, I'm coming back into here. If I take that on the close, I'm looking for a range extension higher. It bounces, comes lower, and you get into this whole consolidation crap. Finally takes out the high here. And you go, I want to see a market structure shift here. So now you have to go to a 5 minute chart. You can see the instability of a 1 minute. You can see it occurred earlier and then went back through that level. So if your stop loss was here, it'd be taken. So here's just the pros and cons of catching that 1 minute chart. You have a risk of it coming back and you get one more little poke through, multiple little pokes through throughout the day. See another multiple poke through. It's easy to take the very last one and say, well, there's a perfect entry right there. But if you would have taken the first opportunity to break that high and you say, okay, Darren, I'm going to look for your first reversal to occur right there. I didn't catch it here. I'd be catching it down here. And then if my stop loss was sitting here, your system doesn't work. We got taken out. That's the con of a 1 minute chart. But a 5 minute chart, look at a 5 minute chart. So now you start to say to yourself, which one feels stronger for me to play off of? Which one do I want to reduce that risk of getting taken out? So your chart occurs here. Here's your 5 minute. There's the first change in direction. It comes back up. You want to see market structure shift. It does here. So you say, great. If it comes back into here, I'm getting in short. I'll get short off of this candle or any opportunity inside here. You get taken out there and there, and then it waffles around, then gives you one more run up and you go, I'm going to try that again. Or you wait for a market structure shift down here. So you see your 1 minute, you can catch it up here. You would have got caught in here multiple times. 5 minute, you would have got caught there and it would have been okay. So you would have got caught once here. You wait for market structure shift. And then second time you would have caught it. And you say, okay, well, I got caught off of this once. So I want to see a structure break below here, which you get here, retrace back into it. Then you get a continuation. Getting back to whatever. So you see there's pros and cons to this 1 minute catching it perfect. We're assuming that when we broke that high, that we're ignoring all of this and we get a nice little perfect entry there, right? But if you would have just used the rule of as soon as it breaks that high, I'm looking for the first possibility, this would have been your opportunity to get in. So if you would have taken that on a 1 minute chart, I just want to show you, if you follow the rules, you can still catch, you still wouldn't get taken out. Here's why. Here's why. Let's say you trade off of here. This is our discount array. We trade through it, trade back into it. Now I'm short. As soon as it breaks the low or takes out the next objective, you pay yourself, move to break even. It comes back against you. You see a change in direction here. You go, I'm on the wrong side of this. It's trading back into this range. Close your trade off. It comes back up. And then you wait for that market structure again. I don't know, whatever your strategy is going to be. But this right here, even if you were wrong, on a 1 minute chart, you're still safe because you're using the rules of aim for the next low. Pay myself, move to break even. You still would have paid yourself in here. And the moment you notice that there's a change in direction, you go, I'm coming back into that range now. This isn't a full continuation on the downside. So I'm paying myself and I move my stop loss to here. If it comes back and takes you out, then you move to the sidelines and wait for a new structure break. So you would have been paid on a 1 minute. You would have caught it early, paid yourself early. and then you look for time and price. So now let's look for time and price. So we'll see how important time is. So that's that 1 o'clock, 2 o'clock in the morning, right? Here's the 3 a.m. candle. There's your 3 a.m. high. You wait for market structure shift here, come back inside that candle, right up to the top, mean threshold. That candle there is your line in the sand. You go lower, you pay yourself at the lows. You see a change in direction here, comes back up, takes out this high, body trades above it. We trade back into it. We go higher, we take out the high, pay yourself at the high, rejection block, high, whatever. Comes back down, we're in the discount portion now, premium. You drop through the premium, which is right there, right into the discount here. Now that premium becomes important. You trade through it here. You come back into it. Watch here. Now here's your consolidation. You're stuck between this one and this one. Banging around inside those two. And then you just wait. Now let's go to time. Let's wait for New York open. Here's your 6 a.m. candle or your 6 o'clock. Our 6 a.m. That's ABS's 6 a.m. candle right here. And that's where our new beginning is. 6 a.m., 8:30 or 6:30 into the mean threshold. And down we go. Here's our 6:30 in the morning, 7:30. Where's 8 o'clock? Oh, here's our 8:30. 9 o'clock open. I remember that day. That was nuts, back and forth. But if you're looking at your daily chart, you see your entry. You have another entry up here, and that the focus is the tough part about this is that you can get, when you're in the 1 minute chart, you can get thrown off your objective. If your higher time frame is, as soon as that high is broken, I'm going to look for an opportunity to catch a reversal. And if I see all this cluster, I'm going to wait for a market structure shift below here. And once I get that market structure shift below there, now I can get back in sync with running lower from my higher time frame objective. Does that make sense? So our 1 minute, you get the opportunity to get taken out a couple of times. A 5 minute, you've got an opportunity to get taken out twice. Let's look at a 15-minute chart and see how many times. So now you can start to say, which one of these levels provides me the safest opportunity to catch that daily objective to be broken. So that daily high was broken. So I'm looking for any opportunity. So if I say my 1 minute, I run the risk. We've seen that already. We run the risk of getting taken out a couple of times. A 5 minute, we see that a couple of times. 15 minute. Okay. Where's our 15-minute reversal? Here's our 15-minute reversal right here. We trade. Don't get an opportunity to get in on it. So you wait for market structure shift to here. There's your 15-minute entry. So 15-minute, does it come back and take it out again? Nope. You catch it there. So 1 minute, you got multiple times you can get taken out on it. 5 minute, you get a couple of times you can take it out on it. 15-minute, you don't. So if you're looking at this from a conservative, safe perspective and say, as soon as it breaks that daily candle, go back and retest this on multiple old highs taken and say, is a 15-minute reversal going to give us more likelihood that that is a set turn in price? 1 minute, you can't catch the high. It broke it again, it broke it again, it broke it again a couple of times till it finally gave you a beautiful entry there. But by that time, you would have been hit so many times, you would have said, I don't want to be in that. Unless you're looking at a specific time and price, like New York or London to set the high, wait for the reversal, catch that reversal, and then let it run, especially if it's taking out the previous night's high. Does that make sense? I know there's only 4 of us in here, but does that make sense? So now you have to say to yourself, is time and price do I trust this price and this time, taking out a higher time frame objective? Is time and price important to me now? It is. It's very important to me, right? If I'm not sure, if I've got all this noise in here and I say 5 minutes still not going to do it for me, I'm going to wait till I get my 15-minute. I'm on a 15-minute chart. When I have a 15-minute reversal or a 15-minute opportunity to catch a short, I'll do that. My stop loss has to sit above the high. So you have to risk all of that. But then you'll say to yourself, if it starts to trade back through this level right here, I'm on the wrong side of that. This is actually the entry right here. As soon as we trade below that level right there, come back and tap it, that imbalance is where you get in. So that 15-minute one would be right there, 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 and there. And that's right on the previous day's high. Strangely enough, they overlap, hey? So right back into it, away you go. And does it break? And now if it breaks through that on a close, you're on the wrong side of it. We're targeting back inside this range again. So 15-minute looks a lot more stable. Now you may go, I know way, man, I'm way more conservative than that. I don't care if I catch the high of the day. I'm going to wait for the hour to show me a reversal. So go to your hourly chart and you say, I'm not going to take this. I'm not going to trust this turn here until I see that level taken to the downside. And that's your entry. And you go, my stop loss has to go above, well, it'd have to be above it would still have to be above the high. Or it would have to be above, where would we put that? Because I'll be looking at this candle here. Mean threshold of this candle. You don't want to see that get taken out. It's the lowest long wick. You split that into half. If you take more than half of that, chances are you're coming higher. Yeah, that's an interesting one. So you'd have to take the hourly, change or trade back into this, and then let it buck. Stop loss. If you're on a daily chart, put your stop loss above the high and let it run for your next downside daily objective. Does that make sense? Does that make sense to you, Russell? Do you understand what we're doing there? So now where we're sitting on an hourly chart, because we've gone from rather lengthy explanation of, let me clear out all of these levels here. So you can see almost why D likes his 5-minute and 15-minute charts. They might give you a little less stress over where you're going to put your, where you're going to trust this high forming. But know that no matter which one you pick, if you follow the rules, is she back already? Are you back already? Would you go through a drive-through? Holy smokes, that was quick. Yeah, we're still yakking. So even if you pick any one of those, just remember that the rules that I gave you, you will not lose your money. You have to follow the rules. You'll still catch the change in direction. It'll come back. You'll pay yourself on the way down using those other rules for internal range liquidity hunts. And then if it comes back to you again, you can re-enter the trade in and start all over again. That's buffering. We used to call that buffering, right? You want to buffer because if it runs through, you took profits on the way down. And if that level finally does fail, and you take a little loss, all the stuff that you made on the way down every time offsets the loss. That's what I meant by buffering. Okay, so there, if you follow the rules, you can still protect those entries, even if they're on the wrong side. You can still protect them and then wait for the next high to get taken. It's something we haven't really talked about, which is a bit of a challenge too. If you break that level, that 5-minute level, that 1-minute level, look at where you are inside the range that you're in. And if you break the discount and come all the way back up into that premium level again, does the premium level get broken, or can you enter in there? If it gets broken and retested, you get to move to break even and wait for the new high to begin. Does that make sense? Let's just show that. Let's go back to that one where we had multiple highs taken, and you can see why, if you follow the rules, you'll still stay golden. There's the change right there. So we see how this one goes higher. Let's go back to the first time we break through that, and I'm waiting for this thing to happen right here. So I look for this, and as soon as it breaks through that low and comes back and taps it, you want to keep going lower. On a 15-second chart, you may see it in there, but it doesn't matter. We'll just stick with a 1-minute chart. So then you want to see this get broken to the downside, because I always look to the candle to the left. It gets broken. In a 1 minute, we don't get a revisit. Don't get a revisit. So now look where you are inside this range. Okay. Look where you are inside that range. Look where you are inside that range. So we're below 50% now. So you wait. If you don't get that opportunity, you wait for market structure shift, or you wait for this discount level to get broken so you can revisit it and then head lower to the next one down here. Okay. So you wait. So you say, what's the opportunity I'm looking for now? I want to see it break the downside. So there, did not break the downside, just tapped it. Now you think, okay, we could be coming back inside that range. If I'm hunting this internal range liquidity, I want to see it get above here, find some support, and I'll hunt for 50% of this range. But you don't get anything there. So you think, okay, I'm waiting for a change in direction. It's got to break through here. It does, comes back up inside it. Now I can go short here. Now, overall, I've run above that daily old days high. I'm targeting my entry right here. I get my entry and I'm short. As soon as it breaks that low, you pay yourself, because you got to pay yourself at the previous low. Pay yourself and then move to break even and let it run. So now you say, I'm on my daily target now. I'm aiming for wherever that next daily downside target was. It goes down, 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 down. Are you paying yourself on the way down? Are you hitting higher targets? Are you reaching for this level? Are you reaching for that level? Are you paying yourself? This level we had here, is that important? Did we pay ourselves below that level? Did we get support of that and continue going lower? Take that low out? Did you pay yourself? Whatever your rules are, you've got to make sure you're paying yourself along the way, right? You see a change in direction here, and you say, I'm inside this range here now. Do I have an opportunity to make some money inside this range? I still want that daily high that we just broke to find support now. I've taken it out. I do not want to see that high get taken. So now that I'm trading back inside this range, I'm going, if I get a market structure break, then the chances are we're running for this premium box that we never got an opportunity to get into. Remember I talk about that? How if you don't get an opportunity to catch this level, we may come back to it sooner than you think. Okay, so we've ran down. Look at this. We ran back through candle to the left. This didn't get, we did get an opportunity on that one. This one here, we did not get an opportunity to retest it on the next candle. See, it's the same things we're talking about here. You get, it comes back to retest it. It went, finally broke through here, and you say, if the mean threshold of that candle gets taken on the downside, I'm looking for a retest of the one that did not get hit. Okay, so here's the one that didn't get hit. We traded through that mean threshold. Look at that, right, bing, through it, hit that level, reverse, change of direction, wait for this candle to get taken out again for the upside, comes back, finds support at it, keeps running. What are we running for? This level right here. It pops through it. So now I'm looking for a rejection block, and I'm looking for old high. Rejection block is hit, pay yourself. If you got in here, you pay yourself. And then all of a sudden it reverses on you. You go, I'm out. As soon as you pay yourself, move to break even, you want to say that level's got a hold price. Again, that's the rules, my rules. You decide whether or not they're the same kind of rules for you, but it's like protect yourself quick, because I'm looking for specific data points to hold price. And if they don't, they come back, they can come back through you quickly. You're going to eat up all your profits if you're just sitting your stop loss wherever you would put your stop loss here. Does that make sense? So going into the week, I would be bearish if the daily fair value gap gets filled and targets 754 discount array. Okay, let me just clear all this lot off of here now. So that's what you want to see, hold price there. Get rid of that. So you don't want to see this get broken on the downside. So where we open today, I don't want to see this. That's the daily upside target. We'll make sure that's in the right spot. It is. So where we open today is important. If we close up above that, come back, find support at it, look for a continuation on the upside, look for this wick. It's 4 levels in that wick that you're looking to hunt for, and the old high. So overall, yeah, we're still bullish. We've come back into this. We've traded above that level. We've come back into this to find support, and we're getting a nice wick off of here, but we did not close back above that level. So we're going to be above here, tap it one more time. That's what I'd like to see here, all the way down to consequent encroachment, and then I'd like to see that keep going bullish. It fails for me if we trade below here on a Monday, Sunday, Monday. We trade below this, come back into this, and start running lower. Then I'm coming back inside this range, and I've got all these little targets down here that I'd be aiming for. If I get an opportunity here, like we've whittled all the way down into the 1 minute chart when we saw the reversal right here, I'm going to do the same thing here, that level. If I break through that consequent encroachment of the weekly candle, if I get through that and look for support there, I'm looking for the lower time frames to get me a continuation on here. So if I drop below it, I look for a reversal back into it. Then I look for a lower time frame continuation on the downside inside this range, and I'd be targeting 50%, 62% of the weekly, or that new larger range. Does that make sense? And then you got to stay disciplined enough to follow that rule, because when you get in 1 minute and you're bouncing around, you forget all that other stuff, and you leave your that's why Michael is so damn good at what he does, is he knows his objective, and he will weather all this crap. He will weather all this back and forth stuff and put his objective down here. And he doesn't care about it just coming back and working it. He'll wait and it'll get there. Because he's working on a higher time frame, looking for that time and price perfect entry and letting it sit and going, man, it can do whatever it wants inside here. I know where it's headed on my higher time frame, and that's why you see it come down, tap his level, and then leave. And you go, oh man, that's genius. Because he's not caught up in all this 1 minute stuff that we talk about every day. And again, the purpose of our show is just to stay on the horse, right? So how good you get down at these 1 minute levels are going to determine how good you are at 1 hour, 1 day, 1 week, 1 month. Exactly the same thing. That's why you get really good at reading price action and staying on the horse here, so that when you see it on a daily chart and it's keying off that level, you go into your 1 hour chart and say, I'm looking for my entry. I know where I want to go. I want to go up here on the weekly level because that's where my daily chart entry is giving me my, like if this was a daily chart and you traded above it and came back into that candle, you'd be like, sweet, I'm looking for my hourly entry here. And for the next 2 weeks, I'm aiming for this target up here. Does that make sense? That's why we practice on a 1 minute chart, so that you get better at looking for your higher time frame objectives. And you use the same analysis on a weekly chart, daily chart, monthly chart that we do on a 1 minute chart that we muck around in inside the shows every day. So, and all the time you've got a support on there using my take profit model 1. If I get entered in here, and this is a daily chart, and I'm aiming for my weekly high or my daily range high premium gap, I keep wait. Then I just go to my take profit model 3, and that's the first BISI I see broken to the downside. I'm on the wrong side of it, or I reach my objective. That's my goal, right? So the next day it opens, you say, ooh, if that breaks below there, we've got to run above this high, and we get a market structure shift. I'm heading back down into here. So it didn't. Okay, good. I'm still aiming for that target. You took a whole day of loss and you're like, did this freak you out? Did that take you out? Or are you still on a higher time frame objective aiming for my target? My BISI, this immediate rebalance, doesn't get broken to the downside. This BISI forms, hit my objective. I'm done right there. Look at that. You're out. You're in. For 2 weeks, you're in that trade and you're out there at your higher time frame, box to box weekly objective. You hit it and you go, now I'm going to follow the rules on the daily like I would on a 1 minute chart. I'm going to say, did this level get broken on the upside with a close? It did not. So the moment this candle gets broken on the downside, I'm changing direction. It closes right there. The next day, it literally rips right through it. And you go, ooh, man, am I glad I hit my objective there. If we get a retracement back into that level before we take this level out, then I'm looking for that candle's mean threshold to get broken on the downside. Look how it found support at that. If it gets broken on the downside and used again as support, I'm looking for targeting this low. Look at that. Low doesn't get taken. Mean threshold held, broke right there. Come back inside it. And boom, finally took the low out. Immediate rebalance. Now I'm looking for this immediate rebalance to get broken to the upside. And then the candle to the left right there, I'm looking for a body to trade above it. Trades above it and then comes back through the mean threshold. You go, it's aiming for this discount array because it broke the mean threshold. Discount array that never got visited till here. So we broke there, visits this, and then leaves and aims for a premium objective again, hits that, now there you go. And then you're back from box to box, box to box. Does that make sense, Russell? Well, there's not many of you in here, but and if you don't understand what we do every morning, you won't see the logic of these levels. But that's my box-to-box trade. And then looking for a reversal. And if that was a daily chart, were you disciplined enough to endure all that day? Or did you get hung up in all the noise? Once you're in the trade, you find your hourly trade here on a daily chart. If this was a daily chart, you'd say, as soon as I find my entry in here on the hourly, and right here you go, wait, no, it went through it, so I'm going to wait. If we break the high again, I'm going to look for my entry. You broke the high. Now you say, I want to see a institutional order flow entry drill right here. We broke these highs, right? It went higher. You go, great. If it takes this candle out now, I'm looking for this candle's mean threshold to hold. It goes boop right there just before the mean threshold and then keeps going higher. Finally hits your objective. So there's lots of confirmations in here for support. I sometimes get lost in keeping my PDA straight, but we can talk about that during the summit. Yes, indeed. And believe me, I get the same problem. I get caught up in the constant back and forth, and you want to grab every turn, every dime out of the market. But if you have a higher time frame objective, and you can start on a 5-minute chart if you want, as a 1 minute enters it, hit your 5-minute objective, and then move to the side. Then practice looking for a 15-minute and an hour, and then a day. If you're an internal range liquidity hunter, every 1 minute range is going to provide you an opportunity. If you are like a super sniper, that's what you'd be looking at in a 1 minute or 5-minute chart. If you're just a quick sniper trading in the hourly candle, you can trade an hourly candle and say, I'm going to trade this internal. Let's pick an hour here. Let's pick a big fat candle here. Let's do this one right here. This is October 1st at 2 o'clock. October 1st at 2 o'clock. Let's move to a 5-minute. October 1st, 2 o'clock. So we've got this one right here. So we start at 2 o'clock all the way down to here. Oops. Two o'clock starts right there. There's a 2 o'clock candle. So what we want to see is a market structure shift, right? We want to see us trade below this level, come back to it and tap it. You opened below it, came back, tapped it. If you believe that that's your level, then take it. If not, you look right over here. I look for this stuff and draw it out, and you wait for that level to get broken, and your key 1, 2, 3 levels I'm looking for to scale in, draw it out. Did we trade below it? Yes, we did. Did we tap it? Tap it, tap it. 3 times you had a chance to tap that. And then an internal range 1 hour candle, look how much you got. There's every candle. If you're a super sniper, there's your entry. There's your change in direction right here. You traded through it. You're out. You're done. Move to the sidelines. Imbalance, imbalance. You got two of them traded through all in one candle. So close your trade off right there. As soon as that candle's done, you go, oh, do I get an opportunity to come back and close off my trade? You do, but it would have gone higher first. That would have taken me out. Just that wick right there. I would want to see that go straight down to milk the last couple of bits of juice out of that one. All right. So there's a good little hourly run from 752 down to right there. If you waited to that one close, 752 to 670 something. So it would have been 80 handles ish in a few minutes. 5, 10, 15, 20, 25 minutes 80 handles. It's a lot. It's a lot. So that's an internal range hourly sniper profile. Super snipers 1 minute charts, right? That's a 5 minute chart sniping a 1 hour candle. Any questions with that? You're very welcome, Russell. Buddy, we got at the summit, at the Trader Summit, man, we are going to be doing this all day till you get sick of it, because I can talk about this stuff all the time. So let's just review where we're at, because I'm going to go and have something to eat here. Where are we at? Okay, so daily, we know we're sitting at we're waiting for this level right here. We're waiting for this level to get broken on the daily chart. We're watching where we open. We're seeing if this level gets broken to the upside, and then we're targeting here and the data points inside the wick, the largest wick here, looking at those data points as targets. And you're always looking for a chance to see a reversal there, because if this is the high, we're looking for an opportunity to catch the continuation on the downside inside the range and hunt internal range liquidity. We're internal range liquidity hunters with our show in the morning. That's mostly what we're after, right? So look at the range you're in. What targets am I aiming for? I'm looking for this lower half here. So pull your fib tool on that. 50%, 62%. Take profit model 1 in here would be great. Wait for your opportunity for see one of those higher time frame objectives get hit. Look for a reversal, catch it, pay yourself inside, and if it keeps going and you got the tiger by the tail, it'll run for you. Okay, that's it for me. Thanks for tuning in. So I'm looking for 3 days back. I'm looking for this low to get taken, reach into this discount array here, or take out that high. So you got this high and this weekly objective. I'd be looking for down here for this fair value gap to fill. If we come lower, we violate this level here, I'm looking for this. If we violate this, I'm looking for higher prices. And I think I had one up there, did I not? No. That would be my upside objective here. So here, oops. Here or here. That's the weekly kind of objective I've got that I'm looking for. That's it for me. Like, subscribe if you're in. If you're not, thanks for tuning in anyway. Appreciate your time. See you tomorrow.